Hello, everybody. Jim Malone coming to you live on Dallas Trading Floor. It is Thursday. Man, the market really pulled back today. It looks like we're back into a uptrend under pressure. We got some situations here where the indexes have pulled back a little bit, so it looks as if we are going to be a little bit underwater. There've been some, it's not all bad news, but boy, oh boy, I tell you what, it is definitely, it. We were hoping that we were going to get a nice bounce and it's going to move up, but it doesn't look like that's the case here. Okay, just got to see if we can get my screen back up here. See if that will work. There we go. Okay, sometimes my machine, I just don't quite do it right. But basically, the Dow Jones, it's down. Based on job losses. They say that the job losses aren't going to be as bad. I have a feeling they're going to be worse, but we'll find out tomorrow on Friday. The Dow Jones went down. We have, we just have a situation where, we're looking at, some potential problems. Here's the thing. I want to be fully transparent here if I can. And that is the market moves to an uptrend under pressure. And when that happens, it is best not to be more than about 50% involved in the market. We want to be less than 50% if we can. I trim my positions somewhat, and I'm right about that 50% level. Kind of show you what I'm in right now. This is basically my, what I have currently. I did, I'm off a little bit on Allegro Microsystems. That was up earlier. I did take some profits, and then I went back in. Maybe that was a mistake. And I also did take some profits on GE. GE was up tremendously, and I want to show you that chart in just a second. That was a real winner today. On holdings, this is the Swiss sneaker company. That was down a little bit, and it was down about 5%. So we'll see what happens there. I did buy a position in ST Micro, hoping for a bounce, and then of course I have a position in the XLE, which is the Energy Select Spider. So, kind of all over the place here when it looks at. I want to show you a stock that was the stock of the day for the Investor Business Daily. This is a stock. Oops! Oh goodness gracious! Not letting us see anything here. We got spammed. Boy, unbelievable! There are So there we can see it's very hard for me to seem like get my act together here. The stock of the day is ODFL. That's Old Dominion Freight Lines, and it's pulled back again, but it does look like we're going to get a reversal on it. It's in the 97th percentile, so it's in the top 3% of all the stocks out there. There's a flat base, and I think we could see it move higher. It's a pretty strong stock. It was down strongly today though, $2.13. So even the strongest stocks aren't really getting the love that you would think. I mean, it's kind of amazing. Even the very strongest stocks are having issues. So just not an easy market to trade at all. But there's always hope. There's always hope. And did want to kind of get to some of the questions. And Drunk Squidward. Same as saying it could crash. Even more thoughts on the market failing tomorrow. Yeah, well, there's jitters all over the place. Let's jump on over to the let's jump on over to the S&P 500, the spider. This is the S&P 500 ETF, and as you can see, I don't know if you can see it here, but definitely making this dump here to the 200-day moving average. So It's right below. I do believe, though, and I've been saying this for a while. I don't know if that's right or not, but I've been saying it for a while, anyways. That I do believe that we sort of, the key level here was this 390 area, and I do think that we're going to move below. If we move below it, that means all bets are off. Then we're in a downward trend. We were trading within, we were trading within a range from about 430 up here. Let's see if I can get that in there. Yeah, about 430 to about 390. But now that it's broken down, if it breaks below that, then the trend, unfortunately, is a downward trend. And we'll be looking to either cover on some shorts or possibly get out. Right now, we need to be less than 50% of the market. I'm right about that level. So not the greatest place to go there. One of the things, though, if you're on the Action Trade Alerts, I did send out a really interesting special deal offer, and that is for for Gavin McMaster's option course, and that is a way to make money in a downward trending market. And I definitely have taken this course, and I think it's fantastic. And so it's something that you might want to possibly consider out there. You might want to possibly consider it out there. It's a great course, and I definitely recommend it. And I put a link in here, so you can definitely you can definitely see it. Let me just see if I have a little video I think I put up on this. Let's see. Let's see if we can. No, I don't have it. I don't have it up. Unfortunately, I don't have this one up. But what you can do is obviously go over to Dallas Trading Floor on YouTube, and it's on the YouTube. It's on the YouTube screen. We have it up. It's Gavin McMaster's course and a little video on that. If you're not already aware of Action Trade Alerts. Well, thanks. Okay. Well, let's see if we can get back and give you some good stuff here. It may be really tough tomorrow. Who knows? Where have you been? Well, I wasn't on yesterday. That's true. I was. I'm sorry about that. Some days, sometimes it's good. Some days it's not. We have a question from one of the users on TikTok about Tesla. So let's take a look at Tesla real quick and see what's happening over in Tesla land. I have not. Tesla seems to be making. Here's the issue that I have with Tesla right now. I mean, it's not really an issue, but it's sort of what's going on here. We're still in this downward trend. I do like Tesla, but we're in this downward trend. And part of the reason we're in this downward trend, I believe, is because of this what they call overhead supply. If we look at about 200 here, the line for about 200. Let's see if I can put that in there. Yeah. If it'll let me. Sometimes it does, sometimes it doesn't. There we go. So that's the line for about 200. If you'll notice, if we go over here about 18 months, you'll see that there's a line here. This is called the overhead supply line. And what that does is that shows us kind of when the people that have bought it are going to possibly sell it. Okay, now here's how that works. We're looking at the weekly chart here. If you look at this line, we've been right up to about 200. You notice how that it came down. We had some really nice action on Tesla, doubled basically from there up to about 200. But then we got some resistance. Why did we get resistance there? Well, part of the reason is it's because we had so many people that bought it, Tesla, above 200. So what's happening is now that's getting up to 200, they're saying, good time to sell, and that's causing what they call overhead supply. And the problem with overhead supply, of course, is that when you get a lot of overhead supply, you put a ceiling on things, and things tend to run in the range. I think that's what's happening with Tesla. I don't think it's a broken stock by any stretch of the imagination, but I do think that we have a situation where it is just not, it's moving in that it's moving in that range. So here's just to reiterate what overhead supply is. This is about the $200 level of the stock. Whenever Tesla gets up close to that $200 level, it seems to get resistance going higher. The reason, I believe, is what they call this overhead supply. That means the people that bought it above this $200 level, and as you can see, this goes back about 18 months. there were an awful lot of people up until very recently that bought it above that $200 level. Why is overhead supply a problem? Well, as it moves up and it gets to the level of overhead supply, people that have held it for a while, they start selling it, sort of like, well, I'm going to break even here. This is my chance, and so that's what they do. So that's what overhead supply is, and this is Tesla. And I would like to say that it's not going to crash through that, but it doesn't look like it. It looks like we're going to move lower. We possibly could give up all of our gains. We could move on all the way down to about 109. If it moves down to there, I would be, and there's a reversal, I would be interested in possibly buying it. But right now, it is a tough one because it looks as if we have oversized supply on 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 Tesla. So it makes it very, very difficult to trade it. One other stock I'd like to show you, the one that I did buy that I did do well on, so it's not all grim news, is General Electric. I mean, this is like, this isn't your father's internet. This is your grandfather's internet. I never thought I would be buying. I never thought I would be buying this stock, but it had a tremendous run today, and I want to show you kind of the gap up on the daily chart. Take a look here at the daily chart. We had this, we had it come in, and by the way, one of the best ways to if we can't do tech stocks, reorganizations tend to be the second best, and this is kind of the situation with General Electric. They several years ago, about 3 years ago, they got a new CEO, Larry Culp, and he is really turning around the company. He spun off the healthcare, and now I do think that we're in a situation where we might see some light at the end of the tunnel. Here's where I bought it. You can see that I bought my 100 shares right before the gap up. Why did I know that? Well, I part of it, of course, is always luck, but most of it is looking at looking at this handle. And if we go to the 10-minute chart, you can definitely see that. We had this lull here, and then boom, we had all this volume coming in. Now, here's what's happening with General Electric. What this is telling me, what this chart format is telling me, is that we have an awful lot of buying coming in from some big institutional investors. They're looking at General Electric, and they're looking at it relatively long term. And they're saying, "Wow, this one they've finally slimmed down. They may be at a place where, where it might make sense. Where this might make sense. If we take General Electric and we look at the earnings that come through. Now, remember, this is a huge company. Last quarter, their sales are up 7%, but their earnings, and that's the key, were up 51%. So right now, General Electric has a PE ratio of 33, which is a little high, but it's very, very, very good. But more importantly, we have an increasing number of funds that are starting to buy, and that's essentially what happened today. A lot of the funds came in and they started to buy. Now, here's part of the reason I think that is a case. Today, if you look across and we draw the line here, you see that we've made a higher high. So the catalyst for these companies buying more General Electric was that it exceeded its higher high, going all the way back to June of 21. If we look at the monthly chart, and that's going really far back, you'll notice that we came in here and we exceeded that higher high. So that's a signal for big investors to come in. Notice how we haven't seen a high like this since 2017. What happened here was General Electric made its higher high, basically almost 6 years. This is about 6 years here since the last one. So it's been doing terribly. It's been reorganized. It made a trip up here to about the $85 range and was turned back, but finally it went beyond it, and I do think that is going to show us some good stuff. All right, well, let's take a look at I'll take a look at NEO second. This is for okay, well, let's take a look at NEO, because I think that this, hopefully I have some good news for NEO, but I don't think I'm going to have good news. But let's look at NEO. This was coming from TikTok. NIO, of course. This is the Japanese EV maker. And I just can't really recommend this one, unfortunately. I mean, I wish I could. I made some money on, several years ago, I was doing well on this stock, but this is one of the reasons why, here's the thing. Stocks, it's sort of like a dog has its day. Many times, Neo may never get back to where it was before. Right now, Neo is in a downward trend. It's got a 6 relative strength. What that means, of course, is that 94% of all the stocks are doing better than it. It's below the 200. It's below the 50, 21, 10-day line. So it's just not looking very, very good for Neo. On the technicals, I would say that this is a sell. This is not a buy. This is a sell. And it just isn't really, I don't think it's, I think you just, if you're in this and you're down more than, say, say 7%, which I'm pretty sure that you are. I think you just sell it and take your lumps, because I don't think this one's coming back. If you look at from when it was first, not letting me draw here. There we go. So when it came out here first, you see it's down almost to where it came out of the box. Back when it IPO'd back in 2018, it came out at about $15 a share. It's half of that now. I just don't think, unfortunately, that this is not going to make this is not going to make any money. Unfortunately, I'm sorry that's the case. But here's the rule, and this is the rule that's really super duper important, and that is, of course, if you are down on a stock more than about 7%. You need to sell it. And the reason that you do, and it's not, if you follow this rule, you'll have capital to be able to play again. You just don't want to draw your capital down. I think that with Neo, it might bounce, maybe, but I think that right now, I just think you got to just kind of wash your hands of it, really. All right, Mr. Bomadoc, thank you very much. TLT, let's take a look at TLT, see how we're doing there. TLT. And let's get TLT up. It's the 20-year bond. This is a little bit different. Of course, this is an ETF, and so it's a bit different than this is a bit different. This, of course, the TLT is it basically seeks the performance of the bond. So if we remember our graduate school, or even not, as the interest rates go up, the value of bonds go down. So that's the reason this is in a downward trend. Now, there's another ETF called the TBT, not the TLT, the TBT, and that one is actually going up. So I want to kind of compare these two with you, just kind of give you an idea of what I think that we're going to see higher interest rates. I don't think it takes rocket science to figure that out, but let's look at the TLT and the TBT and see what's going on there. But I'm going to get put the TBT in there. All right. So this kind of tells us kind of what indeed is going on with these two. So let me jump over to that and see if I can get that up here for you. There we go. So this is not the right one. Let's see if I can get the right chart up here for you. There we go. All right. So this is the TBT and the TLT. Switch that over for everybody on TikTok so they can see what I'm talking about here. But what I'm basically talking about, I think you can see this, hopefully you can, is that with the TLT, this is the ETF that moves with the value of the bonds. And remember, as the interest rates go up, the value of the bonds typically go down. Now the TBT, which is the one that goes opposite it, you can see it's down. So actually the TLT is sort of, there's an inflection point there. So I mean, we could say that maybe the TLT would be the thing to be in. I'm not sure. I really haven't been playing these. These are more kind of defensive, but an interesting thought on that altogether. Okay, let's take a look at GE again because we have a question. Thank you very much for that. Thoughts on GE? Okay, from Mr. Joka. Thank you, Mr. Joka. There we go. So the thoughts on GE. Now, part of the reason I think that GE is doing well is because it's gone through this reorganization. They spun off their healthcare division, and so it's looking much better than it's looking much better than it was just a few years ago, and that's the reason I think that we're seeing it. I also think that we're going to see one of the areas that the areas that GE is in are heavy infrastructure, and that's probably one of the few areas that's likely to do fairly well in the near term future. Because I definitely think we're probably going into recession. I don't think I don't think anybody is surprised at that. But GE is looking very, very good. Now, of course, I came in here, as you can see here. This was my buy on the 6th. This is my buy on the 6th as it pulled back. I bought it once. It went up. I took profits. I waited for the pullback. I bought it again. What I'm going to do now is that I did buy in the pullback. I've been, buying it a little bit, letting it go up, selling half of it, kind of rinse and repeat. So that's kind of what I've been doing with GE. Here's basically the weekly chart here. One of the things I want to point your attention to is that they do expect a decline in profits in 2013, but there's a reason for this, and the reason is they spun off the healthcare. So that's part of the reason why we're going to see, lower sales. We're going to see probably lower sales, but the upward trend is to 2004. I think we're going to see, according to them, according to their estimates, I think that they're going to look pretty darn good when it comes to that. Here's let's kind of focus on some of the on some kind of their fundamental analysis here. They did just report 7% up in sales and then 51% up in profit. So that's really amazing. So it does look like going forward, we're going to see probably some better action on this. But the real reason I believe it went up so much, of course, is that, as we were talking about before, it's moving to a higher high. It hasn't been this high since March of 21. So we're moving to a higher high. There's a lot of funds coming into it. So this was one of the reasons I believe we're seeing, we're seeing a lot of action on it. So definitely good stock. Let it pull back a little bit. It's pulling back a little bit after ours at 91. I think it's totally viable at 90. I think it's totally viable at 90. Matter of fact, I have an order to buy it at 90 coming in here. So we shall see what happens. But that's kind of the deal here. For Mr. CGens001, let's look at let's look at LAZR. And let's move on that one. See if we can, Lumar Technology. I don't know this company, interestingly enough. I'll be honest with you. I just want to see how much it trades. Okay, so it develops autonomous vehicle sensors. Okay, actually, this is probably not as good a. This is probably not as good a. This one. There's some better ways to play this, I believe, than this. This is a relatively inexpensive stock, a $9 stock. Original equipment, Lunar Technology. I think the way to play this one is with not with this one, but with onsemi. onsemi. That's the one I think that you're likely to do better on. This is the company that supplies basically Tesla and all the other manufacturers of electric vehicles. It's onsemi, and that's one of the ones that I think that potentially is looking good. Now it pulled back today. It's coming out of this cup base. As you can see, we've got this kind of cup base going on here. All right, this is onsemi, and we're coming out of this cup base, and if we look at on semi, it's got a very strong 89% checklist, looking very, very good. On the technicals, we're very close to the 21-day line. This is not a bad place to buy on semi. If you're interested in the electric vehicle area and the investments going into it, this is the area that I recommend, is buying the chip companies, because I think that you're going to get a better bang for your buck with those boys than some of these other ones. So that's kind of what I recommend here. All right. I don't know if Workhorse is out of business. Let me check. Let's look at Workhorse. This is another one of the EV startup stocks that I don't know if, I don't know what the symbol is. Let me just look at that. Typing it in here to see what the symbol is for it. Oh God, it's $1. Interesting. WKHS. I know I should know this because a lot of people get asked about this. WKHS. That's Workhorse Group. There we go. All right. What's going on with Workhorse here? Well, it's kind of a sad tale, I have to say. Relative strength is 9 in this one. Currently, it's trading at 164. This could very well go out of business. This company could very, very well go out of business. Let's just kind of look. The checklist is 44. Not something that's really, really good. I think I can't recommend this one, unfortunately. On the technicals, we're well below that 21-day line. Let's kind of look at some of the fundamental. Let's do some fundamental analysis on it as well. I'm going to jump on over to the weekly chart here, if it'll let me. Come on, let's see if we can get to that weekly chart. See if we can make it smaller a little bit. Weekly, there we go. Terrible numbers here. It looks like, yeah, there's still people in it, amazingly. There's 225 funds in it, losing $70 a share. It's just not doing well. Just sell it. The trend is not your friend here. It's going down. If you're down more than 7% on Workhorse, do yourself a favor, sell it, go out, buy yourself a nice dinner, because unfortunately this one, I don't think it's coming back. And just the way it is, unfortunately. Just the way it is. We talked a little bit about laser. We did Workhorse. Just not something that you want to. Just not something you want to look at. With these low price stocks like this, $1, it seems really great. You're thinking, wow, if it can go to $2, I can double my money. But the problem with these is a lot of times they go the opposite way. So I would just be super careful. Autonomous vehicle is great, but really if we're looking for autonomous vehicle or we're looking for electric stuff, there's certain stocks that you should look at, certain ones that you should stay away from. One that you might want to look at that is a startup that is doing well, it's Mobileye, MBLY is the symbol on that one. And that was a spinoff from Intel. This is one that I think we can safely say that, who knows what the future will bring, but one of the things I want to show you on this one, and as you can see, I've been trading it, but I try to buy it when it pulls back to that line of support. That's the 50-day line. And it does look like now we're getting some support at the 21-day line. It's up after hours. This is one I think you could consider, even though it's a startup, and typically this is not a great market. I probably wouldn't be buying a lot of this, but this is in the 96th percentile, 95th percentile, so that this one is in the top 5% currently of all stocks being traded. So it's something to look for. If you look at the overhead, the chart here, what I'm doing here is I'm trying to show you the sales. They actually do have sales. Their sales were up 59% for December. Profits were up 125%. Now, it's still very speculative. PE ratio 54 on this one. So in terms of the fundamentals, it does have a return of 4%. If you want to be in the autonomous vehicle space, this is probably the one for you, Mobileye. But it's very whippy. It's hard to buy. And if you do buy this one, make sure that you set a stop loss 5% or less below where you buy it, because this one tends to move around an awful lot. So thank you for taking a look. This is if you're not just wanting to put this out there for everybody, I'm going to be talking about this tomorrow, but I have got a really interesting offer with Gavin McMaster, who is one of the really great options traders out there. He's from Australia. He is going to be doing his special twice a year course, and we're going to have a special deal on this going forward. So to find out more about this, super easy to do. Just jump over to www.Dallas Trading Floor, and you'll see that where you can sign up, for the emails. And we're going to offer this just to the people that are on that. So jump on over to www.Dallas Trading Floor, and I will be back here tomorrow. Of course, hopefully everybody is having a good day. We did move to a downward trend. So here's the thing: you want to be about 50% in cash and 50% in stock. You really no more than that because the market is trending lower right now. So obviously, so be very careful. We're going to have jobs reports tomorrow on Friday. But till then, smash that like button, smash it, smash it, smash it, and get us out there to more and more people. We have over 100,000 people that watch us on TikTok. So we always like more. And I hope to see you back here tomorrow. I'll be back at 5 o'clock. Until then, happy trading.